Welcome to The Deep Dive. We're your shortcut to understanding what's really driving the numbers. Today, we're digging into Byggmax Group BMAX if you follow the ticker. They're the Nordic DIY guys, low-price building materials. Their Q2 results for fiscal 25 hit the wires pre-market July 11th. And, well, the market reaction was pretty interesting.
Yeah, it really was quite the report. And the market definitely reacted positively, maybe surprisingly so. We're going to unpack why what looks like a modest beat actually got such a strong reaction. We'll look beyond the headlines, at the operational stuff.
Right. Let's get straight to those key numbers for you. Revenue. Byggmax pulled in SEK $2.199 billion.
Which was just a bit ahead of the consensus estimate. That was around SEK $2.17 billion.
And the bottom line, that looked even better. Diluted EPS earnings per share came in at SEK 2.75.
Yeah, comfortably beating the street's expectation of SEK 2.50. So a solid beat there.
Operationally, things look decent too. Like-for-like sales that's looking at growth from existing operations, they were up a solid 7.3%.
But the real story, the thing that I think really got investors excited, was the EBITDA margin.
Profitability.
Exactly. It widened by 200 basis points. That's 2 full percentage points, hitting 10.8%. And they put that down to basically two things: a cleaner inventory position and a better mix from e-commerce. Overall, a clear beat, and investors liked it.
Okay, that margin expansion definitely jumps out. So what was management saying? What's the story behind that operational strength?
Well, the CEO, Carl Sandlund, he pointed out they started their high season, which is crucial for DIY, right?
Absolutely.
Started it really well stocked. But what's interesting is he linked easing inflation to their ability to keep prices sharp. And that, he said, gives them the confidence they can keep those EBITDA margins in double digits for the rest of 2025. So it's not just a one-off.
Okay, so it's strategic. Being ready and using the macro environment, looking closer at sales like for like, up 7.3%, but total sales up a bit less, 5.6%. Currency effects outside Sweden, I guess.
Yeah, that's the difference. But they saw a good movement in the important categories: timber, building boards, paint, and also continued growth in those, customized online products they offer.
Right.
The quarter apparently started really strong. We had an early spring that helped, though they did acknowledge, consumers are still a bit cautious.
Mm-hmm.
Global uncertainty and all that.
So they managed to grab the opportunity from the weather, but are still mindful of the bigger picture.
Exactly. Show some agility.
And profitability.
Yeah.
You mentioned the margin, but this is the 6th quarter in a row it's improved. That 10.8% margin is 2 points higher than last year.
It is. It's quite a streak. And it seems to be the result of, disciplined execution. They've done a lot of cost work over the last 2 years, really tightened things up. Now they're keeping operating expenses steady, but the business can still grow. They're seeing the benefits.
And that financial discipline shows up on the balance sheet too, right? Net debt to EBITDA. That looked really strong.
Yeah, remarkably strong. Down to 0.8 times. A year ago it was 1.5 times, so well below their target. And that financial stability actually let them do something interesting: place orders and pay suppliers early.
Okay. So how did they manage that strength while still growing? You mentioned inventory earlier.
Right. The inventory optimization seems key here. Get this. They actually increased stock for the really important stuff: timber, drywall, paint by like 15-20% compared to last year. Yeah. But their total inventory value was lower.
How does that work?
Smart management. They bulked up on what sells fast for the season, but presumably cleared out slower moving or less core items. And that efficiency feeds right into a better gross margin.
Okay, that makes sense. And what about the customer-facing side, e-commerce and stores?
Yeah, they've been busy there too, improving e-com logistics, tweaking the online product range, getting rid of stuff that wasn't core, plus seeing continued growth in those custom online orders.
And in the physical stores?
They've rearranged almost half of them, trying to make the layout better, presumably. And they're experimenting with tech. There's a beta AI chat tool for advice.
Interesting. So these aren't just like cosmetic changes. They're trying to make the whole experience smoother.
Exactly. Better experience, more efficiency. It all ties together.
And you mentioned paying suppliers early. Did that directly impact the margin?
Yes. Crucially, management said so on the call. Those cash discounts they got for paying early, positive impact on gross margin. And importantly, they hinted there could be more of that going forward. Apparently, this wasn't really a factor last year, but now it's becoming, a significant driver.
Okay. Connecting the dots for investors then. This beat was well received, especially maybe because retail has been a bit mixed lately.
Absolutely. The market just latched onto that margin story. They seemed to completely look past the fact that cash flow guidance was just flat.
Right, focus on the positive.
And you saw other Nordic chains like Clas Ohlson and Rusta tick up 1% or 2% in sympathy.
So a bit of a positive halo effect for the sector, but Byggmax was definitely leading.
Yeah, though this wasn't totally out of the blue. The stock was already up, 25% this year? People were already hoping for a Nordic renovation recovery. It hit a 52-week high in June after some positive data on demand from the warm weather.
So the stage was set. Good results could really ignite the stock.
And they delivered.
So what about the broader macro picture? What did management say about inflation, consumer sentiment?
They noted things have been improving since late 2024. Inflation's coming down. Sentiment is gradually getting better.
But still cautious.
Still cautious, yes. Global uncertainty hasn't gone away, but they pointed to positive signs. House sales moving the right way, lower interest rates, real wages improving a bit. Historically, those things are good for renovation spending. And they feel their agility, their short lead times, lets them react quickly as demand shifts.
Okay, right. This brings us to the point where we put on our, let's say, creative thinking caps.
Yeah.
Given everything we've discussed, strong operations, the market loving the margins, the stocks run up what's an outrageous but maybe plausible idea here.
Well, like we said, the market's focused on margins and ignoring the cash flow. But what if? What if this margin strength isn't just a 1 or 2 quarter thing? What if it's got more legs? Management themselves hinted at more gains from those supplier discounts.
Okay, so my outrageous but plausible thought would be maybe looking at something like long-dated, out-of-the-money call options on Byggmax.
Yeah. Leveraged bet on upside?
Exactly. You're not just betting it's a good company doing well. You're betting the market is still underestimating them. Underestimating how much more margin they can squeeze out as inflation eases further, as those supply chain tweaks and inventory improvements really hit their stride. Maybe they push EBITDA margins even higher than the double-digit guidance they've given for the rest of 25. It's a bet on breakout performance beyond what's already expected.
And of course, the standard disclaimer applies here. This is absolutely not financial advice, just a thought experiment, an illustration based on the call. Do your own homework.
Definitely. Always do your own research. So, to wrap up our deep dive today, Byggmax Group, a really robust Q2. Driven by strong execution, impressive margin gains from inventory and e-commerce, and a pretty nimble adaptation to the market conditions.
Yeah, their finances look solid.
Yeah.
And management sounds genuinely confident about keeping those margins up. Suggests there's some real momentum there.
And remember, everything we've talked about here, informational purposes only, not investment advice.
But it does leave you with a thought, doesn't it? If Byggmax can keep this discipline up, and if the macro factors continue to improve even slightly, how much further could those margins actually go? It's definitely a compelling story to keep an eye on.
Indeed it is. Thanks for joining us on this deep dive. We'll catch you on the next one.